So the why isn't a material thing, it isn't an experience, it's who you are. So for me, my why, I picked 3 of my strengths, is that I'm a high achiever, I'm an encourager, and I'm an educator. So the high achiever, as you can see, I have it written, I want to push myself to grow every single day. Trading is hard, so to stay consistently good at it is difficult, and it consistently challenges me every single day when I show up to the desk. I'm an encourager. That's another thing that feeds who I am, why I'm here. I want to encourage people to live the vision that they see in their mind. I think that if I can do it, so can you. So I show up every day to coach traders, not just to trade my own money, because I'm an encourager. And that ties into the third one. I'm an educator. I like sharing the knowledge that I have with other people to shorten their learning curve in and out of trading. That's who I am. So when I remind myself of why I'm here every morning, as I say at the bottom, playing into these key strengths has allowed me to find and sustain financial independence. And now doubling down on them is what's really allowed our business and other businesses now to exponentially grow. So it's knowing why I'm here, being really tapped into not just these 3 strengths, but all of my strengths, and letting that drive and motivate me because that's who I am at my core. The second piece of my trading plan is what a common question that you'll hear seasoned traders ask themselves. It's, what is my winning approach? So let me delete this box here. What I like to do to answer that question is just simply say this. I don't need to trade. I'm not my trading. I'm Austin, and I make a positive impact on the people in my physical space and with my digital presence on social media. My approach to trading can be surmised in understanding that when I push on the market, I get punched in the face. But when I let the market come to me, when I let my trades present to me, I trade without sweaty armpits. Now that's funny, but you probably know what I'm talking about when you've been in trades and you start sweating, or you bite your lip, or you pick your nails. You do that nervous, stressful tick. Now, to get into the hard details of my trading a little bit more here, my soft milestones for the day. This is something that people ask me all the time. For me, it's 3%. Now that's 3% profit or 3% loss. So as you can see, if I cross more than a 3% gain, I don't look to take anything less than an A setup for the rest of that day. And more often than not, I'm just gonna focus on managing the position that gave me that 3+% gain, and I'm gonna manage that through the rest of the day, maybe even into the next day or 2 as well. But normally, it's gonna be that one trade managed to that 3% gain or more, and that's gonna be it for the day. That one and done mentality has really been successful for me. And now for my losses, if I go down 3%, whether it's between 1 trade or 2 trades, whatever it is, that's when I walk away from the desk. If I lose 3% or a little bit more than that, 3.5% has been my biggest down day so far this year, I walk away. Just step off and walk off. That's it. And then I can come back tomorrow and I know I can crush a trade for 4 or 5%, cover that, and I'm back on top. So for me, having these soft milestones, I don't need to go get 3%. I don't need to lose 3%. I could stop it when I'm down 1%, just stop for the day if there's nothing else. I could also stop at 2% for the day. These are soft milestones, but they do give me an idea of when I should stop pressing on the gas, because I think a lot of us as traders have stayed at the desk too long and it causes us to give back profits. The next section is really important too. What are my objectives? To me, my objective is to trade well with a process-focused approach. The rules that I follow and how well I follow them is much more important to me than the outcome of any one individual trade. If I follow my rules, I did well. It's that simple. If I break my rules, I'm building bad habits and I'm not matching my actions to my words. And that's like my biggest pet peeve. Really, simply put, the objective every day for me and our traders in our group is to follow the ASFX processes, which means following the checklists of the A1, the D1, and the D2 systems. And one thing I always want to remind myself here in the objective section is that I can't judge myself at the end of the day on the outcomes of my trades. If I attach my value as a human being to my performance as a trader, it's very self-defeating. It's not the right way to live your life. So I don't try to judge myself on the things I can't control. Instead, I'd rather judge myself on how well did you follow those tested and proven rules that you know will make you money. You followed them well? Great, good job. You lost a trade, so what? We come back from that. If you break the rules though, you're building bad habits. It's gonna be a dark and bumpy road that you're going down that way. So it's better for me to stay focused on my objectives, being process focused, process driven, rather than results focused, results driven. The time frames that I trade, I'm always on the 15 minute. So I remind myself that when I read this in the morning, you start on the 15 minute because this is where I look to analyze and monitor my trades for the day. If I find a 15 minute setup that I like, that fits the trend that I'm looking for, then I go to the 1 hour, the 4 hour, and the daily, and I try to line that up with what I'm seeing on the TDI. Once I start to get some confluence of indicators, then I know that I might be finding a trade that I want to get involved with. So it always starts on the 15 minute, and here in my trading plan, I remind myself of that every morning. The setups that I trade, I kind of just said this to you a second ago, I'm looking for the A1, the D1, and the D2. Those are my 3 trades. Any other ideas that I think I have, they're either a demo account or they're just an idea that I mark up and I come back and look at it later. Nothing else gets any money. And my pre-market routine, very short and sweet. Coffee, wake up the group chat, read over this plan, and then start scanning the watch list. That's how I do it every morning. I don't meditate, I don't jump in a pool, nothing like that. Maybe when I move to Florida in a couple of months, I'll go stand out on the balcony for a few minutes and take in the warm sunshine and the warm Florida air, and then I'll get to the chart. But other than that, I like to just jump right in. Talking also about my post-market routine, there's a couple things I always hold myself accountable to, and the plan reminds me. I want to come back and review the entire day. Winners, losers, trade ideas, non-ideas, the whole day, to see what I could have missed. But I want to do it after the fact, so it's consistent behind my system. So I can see, hey, there was an entry here, we missed it. Oh, there was an entry here, we saw it, but we didn't take it because we didn't like it. I want to make sure we regroup. The last thing I'm going to share with you here before we skip over a section is my trading commandments. These are my 10 rules. Number 1, don't lose money. Number 2, don't forget rule number 1. Like Fight Club, right? Number 3, focus on the week, not the day. You lose money 1 day, 2 days, it doesn't matter. You have a whole week, you have a whole month. You gotta keep that in mind. Number 4, never stray from the parameters of my checklist. That breaks your edge. Number 5, trust the TDI because it never lies, man. Number 6, make losses quick because I can survive a cut but not a gunshot to the face. Number 7, don't chase losses, just focus on the next one good trade. Number 8, and this is what Riley was hitting me with. Yes or it's no. It's binary. Do you trade C setups? Do you not trade C setups? Keep your trading decisions binary. Number 9, don't push on the market unless you want to get punched in the face. Damn it, I cursed again. And number 10, don't forget rule number 1. Now I'm going to skip over my entry rules, my stop loss rules. I do reserve that information for people who take our course, but I want to show you my exit rules because I've talked with you guys about this before. I grade my setups A, B, or C depending on how they fit the checklists in our entry and exit rules that we detail. A setups, 50% of that is closed at 2R. In the bag, stop losses move to break even so I can't lose, and I manage by my R multiple from there. B setups, I'm just closing them a little bit sooner, moving the stop a little sooner. Same thing for C setups. At 1R, I'm closing 50% and moving the stop. And the final page is my grading rules, my risk management. So above, we were talking about the trade management, how you manage the trade. That's one piece of what people call risk management, but that's really trade management. Risk management itself is how you grade the trade. Now notice at the top, I'm willing to piece in any of these entries if I feel that I might miss a move, and I can add in the rest of that risk if I am right and it starts to move without me when I get those other confirmations. So for me, A setups on Euro, GBP, or USD pairs are going to get 3% max. NZD, AUD, or CAD pairs, they're going to get 2%. The reason for that, the reason I separate that is because I don't find as much success with my systems in those pairs, so I'm not going to trade them as heavy. The pairs that win the most for me have the most volume. Euros, GBPs, USDs, and a little bit of that JPY on the back end. B setups, 2%, C setups, 1%. And if you're off on an NZD USD, it gets 0.5% on a C setup. But sometimes those 0.5% trades still go 4R, and you could still, pull 2% on that. And that's a great trade. So you still can use the C setup grade to be involved in some of the positions. But this